Hello guys, welcome to Frequency in FX Trading Channel. And in today's video, we want to talk about the volatility 25 index strategy, of which we made yesterday. That after analyzing the market, did not obey our signal, did not respect the structure we said it was going to have. We apologize for losses, but that was a free signal anyway. However, we made another trading decision from that market, this particular market. After the loss, we decided to buy the asset, and of the current trades we took on this asset, it has been profits all along. I will take you to this place where I took the trade, just to show you that I am being accurate with my information. In the nearest minute, you're going to see the trades I took, but then I'll tell you the reason why we actually had an exit and a new decision from this market. So before I show you the account of which we took the trade on, please, if this is your first time in this channel, or if you've been here before but did not subscribe, please do not forget to subscribe, like, and comment on the video for more videos like this and more premium content we are sharing to you guys. So this market is what we came to explain today. And yeah, in the so let me just take you to the trade. All right, just so you see it, this is a volatility 25 index, of which we bought after the sell trade was closed. You can see in my profit is $16, and you can my balance is increased by $16. That is because this trade, probably maybe it is traded on a $3,000 account. There is more equity and profitability if it was traded with higher lot sizes. So this basically means that we have traders that at this market traded with higher lot size, in other words with bigger capital, and their profit definitely is going to be more than a 16 US dollar. So if I went all the way to my trading history, if I went all the way to this option, I want to I want to show my trading history. So I'm just gonna turn that on right here, and just so I show you the trade that we had the loss on before we decided to buy this one we are in right now. So with our market, I'll show you with this mouse. Make sure you're following up teach with the mouse on the screen. So you see this point here that says sell 0.9 minus $5. Yes, that says this was the point where we sold, and this was the point where the market took us out from. And after we waited for the market till it got to this point, and we bought two trades here. After we bought two trades here, one of trades we bought went got we took our take profit for that trade at this point, and this is the second trade that is still ranging, and you can see this is the smallest of the lot sizes in the volatility 25 index. This is the minimum lot size required in trading this particular asset. So this green down arrow you see here represents the point where we stopped out the trade that we took. And the more trades has been going, it has been in profit all along. So you do not say, hey, maybe you're playing with our mind, you bought here and you sold here. No, this is basically that same MetaTrader 5 account of which I took my trades on. Right, I took the trade on here and I had it exited at this point, and I had a trade opened here because I waited for the market. And you can see in my analysis, after my buy trade, I only went into a loss a little bit, and then I went back up. I explained the strategy to you guys after I go to the charts.theriff.com, and this is where we are right now. And of the chart, you see, and that the reason I brought you here is so I can have all of my analysis detailed and structured so you get to understand them. All right, so this is the trading view chart for the derivative asset, and this was where we took our trade. This was where we took the trade that we played later on. I'll show you with an arrow bottom, and you can also trace, just follow up the mouse when you see it moving around the screen. So this was where we took the trade at. This was where I told everybody with a signal that I made. I said my sell is going to be here and my stop loss would be at this area. Let me just check the trading, the MetaTrader 5 account, so I'm sure of where I took my loss at. So yeah, I saw it now. This was where our loss was, and I said the market was going to go 1:10 profit. And for that reason, the market actually, after we took the trade, did not go 1:10, but however stopped us out of the trade that we have taken. So then the next analysis that I considered after the market hit our stop loss, I did not try to sell again because that would have been a loss and another loss and another loss of what we are having up here. What I did was I waited for the market to have gone this point where it retraced the top of this week. It retraced, it almost retraced, and of course it didn't touch. So I did a simple mathematics where I drew the Fibonacci level, and I tried to use a mathematical concept called approximation. If you went to school, you know that approximation is a mathematics subject of which you will be taught in your grade 9, something thereabout, Nigerian's time frame, SS1. Approximation generalize where you pile up everything instead of taking it down or moving it upward. In a mathematical explanation, if you are trying to approximate, you are literally saying if you add 1,000 naira and you wanted, you bought something for 300 naira, and they tell you your change is below 500 naira. Something pops up your mind that tells you it's too low. But if they mention 700, 600, 800, you still have a clue that your change is about to be given in the right amount. So we say that is because approximation, is something that compiles a whole figure and says this is where it is based on this, and this is where it cannot be based on that. And the way we calculated this with mathematical figure is by telling us we have minus and we have plus. We have all the way from 1 to 5, and we have all the way from 5 and above. So if we wanted to do this in a percentage term, we say if we had 100% of anything, if we approximated 100, we are going to start our calculation from the 50 percentage. But if we approximated anything below 500, we're going to count our calculation from minus 4 all the way to 0 percentage. So basically, you know, this topic called approximation is anything that is above, anything that is above 5 is is I, and anything that is above that is below 5 is said to be uncalculated, on what do we say, on realistic, right? So this is an arrow, and if I drew it down, where is my 50 percentage? My 50 percentage is in between these two arrows. So the middle of these two arrows is my 50%. And if it was 50%, if 50% marks out a newer level, 50% gives you 61, 70, and 100 percentage. But below it gives you 0.38, 2.36, and 0 percentage. That is the 50% higher and the 38% lower. And so this is something of the market accountability was what I used in order to have taken this blessed decision. So I did my calculation from this point to this point, and my Fibonacci level told me that because he has gotten to 50 percentage, I will zoom in well. So you see, he actually got to 50 percentage and all the way to the 61 percentage. It is going to be a valid buy, and the topic is approximation. If you wanted to learn more topic on approximation, you can visit any YouTube channel or just read courses that teaches the approximation, you know, topic. And yes, after that, we took our trade here, and our stop loss was just below this green candle. And below that was where the market started out a new movement from. Below the after the green candle, the market started moving seriously upwardly. And yes, after the market did what it did, I then used my Fibonacci level to calculate that particular same green candle. And my take profit is going to be all the way to the 436 Fibonacci level. We all know that Fibonacci is basically a mathematical subject or topic taught by professionals that actually calculates life and waves in motion. So Fibonacci is a mathematical concept that we use in our everyday life. Our body consists of Fibonacci level from our head to the neck of our body is a 25% Fibonacci level. From the neck of our body to our waist is a 50% Fibonacci level. And from the waist to the head side gives us anything that represents below 50, approximately all the way to 100%. And that's because our brain carries every information, everything that we use it for in life, and that is Fibonacci applied to body system. But the Fibonacci that is applied below the body system talks about the other side of it, from the waist to the leg side might not be as important. Probably in the other side of mathematics is the minus aspect where it is rounded down, and approximately minus is anything below and plus is anything above. So I know I see people that can live without their legs and their laps. There are people living without their laps, but you definitely cannot live without your head. And that is why your head has 100% Fibonacci and beyond. And that is a human analogy of his body. So let's call this a human being. I'll just make this thing from this explanation. This is a human being, this is his hand, this is his waist, and this is his whole body. This point here can give you more ratios, which is the 168%, 261.8, 361.8. That is because your head can calculate more and more and more, but your leg can't cannot even calculate without the head as the body. So you cannot live without your head, but you can live without your legs. So that is the concept for this trading strategy. The Fibonacci applied to wick structure is going to be the topic of this trade, or the topic of this strategy. Let me show you. Fibonacci concept applied to market wick strategy. So I'm going to copy this and I'll make it the title of this video. But please, you need to be a subscriber because we're going to be making videos that are going to be talking about market structure. We're going to be making videos that will be talking about market structure and you know and the Fibonacci, of course. And this specific video is going to be based on the Fibonacci topic. So this is the title of this video. I might soon be ending the video, but the strategy I used in this trade would mean that our take profit is going to be all the way to the 423 Fibonacci level. and I'll just take you back to the Meta Trader 5. So you see that our market is currently still, doing its thing on this particular trade that we took. So let me go to the 25 index. So you see where I took the trade from. So you know the market is not lying. This was where I took the trade from, and this is where we are right now. So thank you for watching this video. See you in my next video. This is your first time in this channel. Never forget to like, subscribe, share this video to your friends and family. Tell the people who do not know about the video so they will start to trade forex and make money like you and like frequency in FX trading channel. Bye for now.